When you give your money to the bank, they hold it in the vault just for you and put your name on the bills so that you can be sure it's safe and sound. The same with your stocks too. Everything is insured and you have zero risk of loss. This information was provided to me by my pet unicorn. You came here for the truth, so let me unveil that for you. Today we are going to look at the truth, the reality. No unicorns, no flying pigs. You're just gonna get the information you need. Now, I'm asking the question, is my money safe in the bank? We're going to talk about that today, and I want to begin with this article out of CNBC, and it's talking about the stock market. It will be the longest bull market in U.S. history. We're looking at about 3,500 days of bull market here, and it has been an incredible ride. So many people would point to the strength, to the obvious desire to purchase U.S. equities today. But it's not so black and white. We need to look at the truth behind the situation. Number one, have people been buying since March of 2009? Or have they been buying throughout the years following? Also, did they buy previous to the crash? What year did they buy in? What stocks did they buy? Have they sold any in this term, in this time frame? Have they been reaping any of the rewards from that? Or have they simply been investing and holding their money? These are all questions, and it is not simply enough to say this is the longest bull market in history, therefore stocks are a good investment. There are cases in which paper investments can be good for some people. There's no denying that. And there's no denying the fact that these have appreciated tremendously over the past few years, since March 2009. A lot of the gains have come from a select few stocks throughout 2018. If you look around the world, most of the world today is in a bear market. The actual total global stocks are down minus 15% this year. You can see that and have to ignore it and look only at the US stocks. That's what most people are doing. But of course, that's unwise. This market has been supported by the Federal Reserve. This market has been supported by other central banks. This is the balance sheet of the Federal Reserve. You've seen it countless times before. They can't even get rid of this balance sheet without collapsing the market. Let's be honest. Let's be real. Some people would agree, but they'll suggest they won't allow it to fall off their balance sheet, because then the market would crash, and they don't want that, apparently. Then we have this, the Fed funds rate. You've seen it countless times. They can't even get it to 2% because it's too risky. They're already talking about not increasing the interest rates as they promised, but they're going to try some other things. This right here shows the true weakness that is apparent. There are over 40 million people in the United States on the SNAP program, food stamps. This program is, number one, very expensive, but number two, shows you the real weakness that exists for so many people. 40 million plus people need the government to eat. Is that a strong market showing up in the average person's pocketbooks? Of course not. Wile E. Coyote had it right. This is the market. This is the economy. It has gone off the cliff. We just haven't realized it yet. But at some point, there will be a trigger event And this will come tumbling down. This is where we're at right now, today. Over the cliff. Not about to go over the cliff. We're already over the cliff. The Federal Reserve and other central banks around the world are keeping it supported. And they're continuing to do this. But they're lessening and lessening and lessening. And eventually, they're going to come and hit the ground. Why would they do this, you say? Why would they want a crash? Then they can't control the system. That's not how it works. They own the printing press. They own the major corporations. They own the entire monetary system globally. They have the rating agencies. And they have all the supranational organizations, IMF, World Bank, and so on. They know what's going to happen because they make it happen. And perhaps they intend to further consolidate power and control. This is going to be an unfortunate situation for many people because they are just like Wile E. Coyote. This here is talking about Russia in the 1990s and then going back further in Soviet times. I'm not going to read it all to you, but essentially what we're looking at here is a time in which people had their wages taken away from them, saying that we can't pay you now, but we're still going to pay you. Okay, so it's not as if you're not going to get paid. We just can't pay you now. It sounds like a gambler who simply, got in a little bit over their heads. And now they, unfortunately, can't pay up today. Maybe I'll try to get you that money tomorrow. Eventually, the creditor comes back and, they may have a difficult interaction, let's call it that. But that's Russia. Go back further, during the Soviet times, they actually cut people's wages at some point. They cut the wage and basically said, look, we're going to give you government bonds instead. Those government bonds, of course, continued to be delayed further into the future. So although this is one part of the world, things like this have happened many, many times before. On small scale, on large scale, just depends. But it could happen at any time. And you might be thinking, no, not possible. They won't do it. Well, we always have to look at things that are being done today. And one of those things is the bail-in regime. Everybody's favorite topic to ignore. But of course, that's why you're here. Ottawa has laid out its final regulations for banks aimed at avoiding the use of taxpayer dollars, not true, to bail out financial institutions in the, quote, unlikely event of a failure. That's pulled directly from the report. You can read it. I've done videos about it. Under the so-called bail-in regime, authorities could convert certain kinds of unsecured long-term debt of a failing lender into shares to stabilize the financial institution rather than asking taxpayers to fund the government bailout. Okay? Complete bull, but it doesn't matter. All right. Now, it goes in, basically says that they don't want the 2008 situation to happen again. And here's where they lie to you. Unlike in the US and the UK, Canada's banks did not need a bailout, but the regulations shore up the country's banking framework and outline contingency plans for the future crisis, saying that, we don't want what happened there to happen here, so everything is good, it's all fine. Now, this right here is actually not true. It is, in fact, a 100% lie. Canadian banks, and pretty much all banks around the world, many other institutions as well, received a bailout from the Federal Reserve. They received a bailout from the Federal Reserve. We found that information. I did videos about it before. This all comes in with the whole $16 trillion bailout, and that the actual people or the institutions that got that money was later disclosed, okay? So that information there was brought out. We found out that all the major Canadian banks got money, okay? That's a lie. They're not willing to tell us the truth in the mainstream media. This is the Globe and Mail. And of course, they all do the same thing. They're all reading from the same script. So that's that. There will be a bail-in that will occur and people will lose their money. Okay, it might be, let's say, for example, if 100K is that point at which they say, this is our insured amount, we're going to have 100K insured. So as long as you keep under 100K, you're fine. Well, what are they going to do? Anything above 100K, they're going to cut it. That's what they'll do. And that'll be the first round. Or maybe they'll do it to some sort of uninsured account that you have, some sort of type of investment account. It's above an insured amount, or the account itself is not insured. That's it. They can take from that. That'll be the first round. That's when you know anything under that 100K, well, you're next. They did it in Cyprus as a beta test. And there's another one that I also want to touch on. MF Global. You might remember this. Well, we'd like to forget this one, but let's just call it for what it is. This is the fraud that exists in the system today. MF Global took segregated accounts and commingled them with their own investments, their own gambling, and then lost everybody's money. Yes, some people got their money back, but how did you feel if anybody, government, your employer, or a place that you put your money, said, look, we can't give you your money now, but we promise we're gonna give you your money. And you get it back a year later, 2 years later, 5, 10 years later. How would you feel? Would you be okay with that? I wouldn't. But a lot of people, that's the way they act. When they put their money into the financial system, whatever type of investment that is, they basically make this agreement, the silent agreement, that I know I might not get my money back, but everybody else seems to be getting their money back, and I don't really have a reason to worry. The economy is steady and stable, therefore, I'll probably be able to get that back. And it is a big, big risk. You're taking a risk. That's all I'm trying to highlight. I'm not saying don't do it. I'm not saying don't put your money anywhere. Look, we need banks. We need banks to be able to facilitate transactions. If you're an employer, you need to pay your employees. If you work somewhere 9 to 5, you need to get paid. It has to go into the bank. They do direct deposits. I understand that. Please don't put words in my mouth here. I understand it. But when you think of these investments, or you think of the safety and security, when really it's Wile E. Coyote happening, this is reality. This is what we're experiencing. We have this false idea that we are on firm footing, but nothing could be further from the truth. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. I do appreciate that very much. And if you want the financial education you were not taught in schools, these 2 books have it all. There's no jargon in these books. There's no confusing terminology, and anything that might be a little confusing to anybody, I explain it right at the beginning. I give it a little breakdown there so everybody's on the same page, and I just go through and explain things very, very simply and easily. I know that you'll appreciate it. So check it out. Link is in the description below, and if you're interested in the audiobook version, you can get that at themoneygps.com.